So, hi there. I'm Mike Tremezzi. I'm here with Eric Kress to talk about a better player experience, how blockchain stands to improve how we play games. A little bit about myself. I'm the VP of Token Economics at Forte. Prior to this, I led the strategy group at Kabam as we scaled the company rather to an international gaming concern with over 500 million players prior to the sell in 2017 to Netmarble and 21st Century Fox. Like Eric, my background originally was in finance, where I was doing equity research and investment banking prior to switching over about 15 years ago to consumer internet and technology for the likes of Yahoo, CBS Interactive, Fox, and Apollo Group. And I'm excited to talk to Eric today about blockchain, in part because we both worked together in Kabam. Eric has an amazing history in the gaming space, and I myself come at a lot of these propositions from a data analytics, data hound perspective, and I know Eric does as well. So I think we have a lot of interesting things to talk about the arc of gaming with respect to blockchain. Eric, do you want to provide a little bit of background about yourself?
Yeah, I mean, I've been in the industry for 25 years, depending on how you calculate it. It's kind of split between both investment banking and research, and then also working in the gaming industry. I spent 7 long years at Electronic Arts, and obviously 2 years at Kabam, where I met Mr. Tremezzi here. And then I've also spent about 10 years doing investment research, covering the publicly traded names for investors like hedge funds and long-only mutual funds, et cetera. Now I have a consultancy where I kind of do a bit of both. I provide consultation for hedge funds and long-only funds on the publicly traded companies. And then I also do a little bit of consulting for industry players like Amazon, Sega, FunPlus, and also spend quite a bit of time with Warner Brothers these days. So I also do a weekly podcast, Deconstructor of Fun, which gives me a platform to rant about current industry news. And you know, my focus has always been kind of utilizing market data to understand the market and anticipate consumer demands for products, and basically providing analysis on data and predicting kind of how many units of Call of Duty are going to sell every year, how their services are going to go, and basically doing this across all the publicly traded companies.
Right. And so it's a little bit sort of played out cliche, but I think both at Kabam, when we worked together, and now, so much of understanding the industry is understanding some of the dominant trends. And so when you're speaking with some of the companies you're helping to advise, or you're trying to educate hedge funds in terms of what's actually happening in the industry, what are some of the themes, what are some of the trends you surface to them at this moment?
Well, currently, I think the big buzzwords of the industry are kind of like the social network, user-generated content, cross-platform play, software as a service. Those are the big 4 that I kind of keep hearing over and over again. And if you need the most recent ones, you can always get a full dose of that from any venture capital press release for these investments that they're making. But you know, these big trends are kind of the things that are driving the big publicly traded companies, and also, again, a lot of these new companies are being invested in by the VC community. So quickly, just to give you a really quick overview, because they're all very kind of complicated trends in some ways. But social is basically the building of communities around games. Whether it's Discord, YouTube, Twitch, esports, etc. It's like, in the history of gaming, we were limited by couch co-op, and now the internet has created the ability to build huge communities around games, and that is something that's continually being developed and built out. The second one is like user-generated content.
So just on that social piece, you also talked about communities. That social piece encompasses communities that exist outside the game. So people that have a tremendous amount of fandom for a particular title, they're building communities with the likes of Discord and other communication tools outside of the actual game itself.
Right? Exactly.
Yeah.
Inside and outside of the games,
Yeah.
depending on what kind of game you're talking about. Guilds are also a big part of that, and Discord groups, of course, outside of the games, etc. So anyway, the second one is the user-generated content piece, and this is primarily geared kind of focusing on Roblox and Minecraft, but there's also things like The Sims, where they have a huge community of people building items for the Sims game. And fundamentally, this is basically the studios or the developers providing tools in which the consumers can build experiences within the games and share it with others. And we are seeing a lot of investment in this space, including companies like Manticore. Also, Epic and Fortnite are also working to get into this space currently with their tools and technology and user base. The third thing is cross-platform play, basically simply allowing customers to play whenever, wherever they want. Epic and Fortnite definitely have accelerated this, the adoption of this, because they've been just pushing this. This is something customers have been wanting for a long time, but some of the consoles and Microsoft and Sony have been kind of hesitant to embrace. But now it's kind of like table stakes, and I think there's a huge opportunity to expand this and basically allow crossplay by taking advantage of the uniqueness of each of the platforms. And then finally, really big one is the software as a service. And this is a really broad term, so I'm not going to really go into the big details around this. But fundamentally, it's delivering the initial experience, but also providing content and live services to keep the consumer engaged, and also keep them spending. And I think FIFA and FIFA Ultimate Team is a really good example of this.
And so on that point, I think so much has changed in the past 10 years with respect to monetization and software as a service. And I think that they're inextricably linked, software as a service and some of the monetization trends. And I think that when we think about blockchain, it's kind of hard to discuss where the arc is going if we don't know where it sort of maybe not necessarily began, but where it has been. So with that in mind, over the past 5 or 10 years, what do you think some of the changes are with respect to monetization? And again, it's sort of inextricably linked to gaming as a service.
Yeah, well, one of the big examples is FIFA and FIFA Ultimate Team. So 10 years ago, basically FIFA sold just the packaged goods component, and they were able to drive maybe $50 per customer, on average. And currently now with Ultimate Team, they're driving close to $100 plus per customer. And what was interesting about this is it almost happened by accident. As far the story that I was told was that EA was discontinuing this PC FIFA Manager product that was they must have been around for like 20 years. And the head of development for that team was asked to create a mode within FIFA using the same systems. And that's how basically Ultimate Team was born. And now the business is like almost $1 billion a year, or more than $1 billion a year. And I'm hoping that he's getting some kind of royalty on that one, because that was a huge, huge boon for EA. And so fundamentally, it went from a standalone product service to a product plus an additional service over the year of the season, and it's generating insane amounts of money. And during that time, it also grew as a franchise in terms of how many units it sells on a yearly basis, expanding to different geos, et cetera. So huge software as a service product for EA.
And what's interesting about what you just said is that you just said that it almost was stumbled upon by accident. And so imagine, if you will, that such accidents could be designed explicitly against or designed for. And so hold that thought. We'll revisit it when we start talking about blockchain. But there's one thing I want to talk about Ultimate Team, just for some of the viewers that may not be familiar with the mechanic. And correct me if I'm wrong, but essentially it's very similar. To sort of characterize it simply, it's similar to, say, baseball cards, the old baseball card packs, where you essentially buy baseball card packs with hopes of having one of your favorite players in there. But in the context of FIFA, you could actually use those players in game. And there's a lot of cards are rare. Some are exceptionally rare, but there are a lot of common cards. So it's really the pursuit of your favorite players. And FIFA is a little bit different in that you have utility and you can play with them, that drives some of that incremental spend. Is that sort of a fair characterization?
That is a very fair characterization, and it's also what I would consider a pay-to-win mechanic, where that if you want to be competitive, you need to spend acceptable amount of money in order to build a team that would be competitive in multiplayer. So that's a really key component of this game versus some of the other games like Fortnite and others that are not pay-to-win.
And so that was on the monetization front. Similarly, on the UGC front, the user-generated content front, what have been some of the trends, or rather, what has been the evolution over the, say, past 5 or 10 years?
The two games that kind of have the most massive success here is Roblox and Minecraft. Roblox has about 100 million active monthly users, and Minecraft has about 125 million. We are also seeing, again, some investments in other companies that are trying to up-res the tools and technologies to build more compelling worlds. Manticore is one of them, and then also Epic. Mr. Sweeney's grand vision is to create similar type of user-generated content worlds with the Epic launcher and the Fortnite engine, and basically to build the next metaverse. So to summarize, like the vision of these companies in general is to create kind of the metaverse similar to movies like Ready Player One, and hopefully not in the dystopian future like Ready Player One, but they want to basically create a world in which you create an avatar, which is a virtual representation of yourself, and explore, experience, transact in a virtual world that's been built by both developers and players. And so this original vision was actually built by Snow Crash back in the early 90s, I think, but now we actually have the technology and the infrastructure really to develop this type of world. So yeah, and it's interesting. I was thinking about blockchain and how blockchain could actually help facilitate these trends, and also help kind of build the economies around these opportunities, particularly on the metaverse type concepts. So that's why part of the reason I was really interested in doing this talk with you is just to understand exactly how blockchain could be used to help facilitate this stuff.
Right. And so with that in mind, I think that as I think the conference has highlighted, there's a lot of different flavors of blockchain. And for the purposes of this discussion, I think it's important to distinguish between, say, blockchain in gaming and token economy within a game. And so what blockchain in the context of gaming means is that there is a record of all the transactions, and a record which effectively can't be altered. So the record of the transactions essentially leaving a trail as to how an asset in a game has changed hands. So I bought the asset off a developer, I then sold it to another player, that player then has kept it and then maybe sold it after a period of time. So it's like a record which is effectively immutable. But what I think is far more interesting is the token economy within a game. And what that essentially means is the set of rules that governs how an economy works in a game. It is no different than, say, the set of rules that govern how the physical economy works. And the rules govern what we as individuals or we as entities, participants in the economy, can do. And so what that means in the context of blockchain or blockchain gaming is that token economy means that number one, it allows for the verification of authenticity for the different goods. And this is really just a function of the blockchain ledger, if you will. But what I think is really important is that I think unlike in the physical economy where there's in the physical economy, you have different people that can verify the authenticity of products. In a digital economy, you need that same level of authenticity, and the blockchain itself provides that. So imagine, if you will, as a player, you want to procure the gear that was used in an esports tournament by your favorite player. Like, this is the mechanism which essentially serves as an autograph to assure you as a potential consumer or fan, etc., of this collectible that is in fact real. The second big advantage is that the players actually own the asset. So what that means is that the player owns the asset in-game, but they also own that asset out of the game. They can take that asset with them. So imagine, if you will, using the Ultimate Team example from FIFA, players or individuals own the players as part of their Ultimate Team, and they can port those players with them, and they can sell them on marketplaces. And essentially, they can use it as they would like. So they can trade them, craft them, etc.
But as part of the economy, they could actually, it could help control the rarity and the uniqueness of the individual players and the cards. Allow more tight control over the economy, so we don't see, some more protections, I guess, from the investments of the players. Is that kind of the idea?
Well, you would have a clearer sense, and so that sort of ties to the third point, in that it supports true peer-to-peer trading through multiple different mechanisms. So peer-to-peer trading via, say, an order book, no different than, say, how individuals trade on a market where there's a bunch of individuals that are listing an asset, a bunch of individuals that are buying an asset, and there's consensus as to what constitutes a fair price. Or people can trade an asset, a super rare asset, versus like an auction mechanism. So no different than Christie's, right? Where people put an asset on an auction, and over the asset has a specified duration, and at the end of the duration, the person that bid the highest would procure that asset. Or there could be automatic liquidity provided by a market mechanism. And so you see that in the markets all the time, where essentially a principal trader could buy an asset on part of players. But all of this to say is that when you allow for ownership and you have a marketplace, then the market dynamics will start governing what people regard as being rare and what people regard as being extremely valuable versus what people regard as being relatively common. And I think a developer can clearly influence this by the number of assets of each type that's minted, but ultimately it allows for the players to express themselves what they find to be valuable, right?
Yeah, I mean, I think peer-to-peer trading has been quite a bit of a challenge for some of the publishers to implement. I think FIFA, Madden, NBA 2K do a reasonable job, but all have challenges managing it properly. But it's games like Diablo 3, which was an absolute train wreck. You know, Diablo is probably the best, worst example of a poorly designed player auction system, a system in which they ended up scrapping altogether. But they basically designed the auction house, and it did the opposite of what they intended. To put it simply, they created more incentive to play the auction house than they did to play the game, and they didn't have the good controls to change that, so they scrapped it. And of course, the goal of any Diablo game, as all of us know, is to kill enemies, earn loot, find upgrades, repeat. And basically, the auction house completely disrupted that core of the game. So, as people spend a lot of time farming games, items, or weapons, whatever, having an efficiently designed marketplace for trading could be hugely beneficial for lots of different types of games, not just the sports games as well as the RPG games.
Right. And having the economy, or rather the marketplace design, being at the forefront rather than somewhat of an afterthought. And just to your point, though, about FIFA and NBA 2K, and I play both those games, and NBA 2K more so than FIFA. But I will say that some of the marketplaces and some of the sort of offline activity that goes on, including selling of accounts, it's sort of geared towards maybe a player's different life cycle. So when people are maybe more inclined to stop playing the game, they're more inclined to engage in some of these activities. Whereas what I'm referring to is a player through their entire life cycle can engage with peer-to-peer trading, and it can really complement the early part of their gameplay in addition to their elder gameplay as well. And so in addition to sort of trading assets, what I think also blockchain is really unique, or gaming, the token economies in games is really unique, is that it also could allow for the trading of services. So imagine, if you will, me as a player, I'm providing you with tokens in exchange for a service. And that service could be anything you could sort of think of. And what's really important is that the ability to trade for a service is calcified as part of the rule set of the economy. So I can play with you, Eric, and I could transact with you for a play along, a guided raid, if you will. Sometime, if using the NBA 2K example, time on the blacktop where you can help me improve my play style, right? But this is like a formal part of the economy, no different than, say, services are a formal part of the physical economy.
Yeah, I remember in the early days playing World of Warcraft, there was a lot of sites where you could go and have them play your character, and it was just completely hacked at the time, and caused all kinds of issues with players getting their accounts robbed and taken away. So having a system like that would have been super beneficial at that time.
And yeah, right. And in addition to sort of trading for services, you could also, players can transact for yield. And what that means in the context of gaming is that there's a lot of games that essentially have, I think, strategy games. Think of your favorite sort of tower defense games, which essentially have a bunch of different resources that are required to build different buildings, and the better buildings you have, the more sort of powerful your base is. Imagine, if you will, you can use those resources like rock, iron, etc. And instead of spending that iron, you can effectively invest that iron for more iron, right? I mean, it's like, I think it allows for another layer of strategic decision making that, for the right set of players in the right genre, they would find appealing. And it just expands the metagame.
Gotcha.
Right. And so similar to all the different sort of transactional rules, some of the other rules of a token economy could describe, or they could outline essentially how different assets are distributed to players. And I think, as we know in free-to-play, the majority of assets accrue to those that are willing to spend. And a healthy ecosystem consists of people that spend, but also people that are incredibly loyal, people that are trying to build up your community. And what a token economy does is that it allows for those players with those actions to be the recipient of some of the most valuable goods, some of the most valuable digital assets. And then those players themselves, once they procure those assets based on their loyalty or their skill or any sort of like proxy for engagement, deep engagement, can then play with those assets, or they could trade them to other players who maybe are less engaged but have deeper pockets, and thereby creating almost a perfect Pareto trade. If our old BAM parlance, if you will.
Yes, I remember that from back in the day.
And so, and tied to that, the token economy can also dictate sort of rewards and incentives for the different players. And so, when you think about a healthy gaming ecosystem, what are some of the things that you think players do to contribute to a healthy ecosystem?
I mean, the critical thing is basically participation and then also competition. In order to build a community around a game, you need a loyal audience to participate, but then you also need really competitive users to really keep driving the game forward. And yeah, you basically need both.
Right. And so with blockchain and token economies, you can incentivize players, you can also penalize players. And so all those points I sort of outlined, right? I mean, they're really the basic building blocks of an economy. And the point I sort of want to make, tying back to some of the themes that you had outlined, and some of the themes you had outlined were around social, UGC, gaming as a service, meaning it isn't an a la carte experience, it's a prolonged experience, and cross-platform play, is that with those themes, players can essentially do everything, or as they can interact fairly deeply with their product. They can form communities in the game, outside the game. They can create in games. But the one thing they can't do is they can't participate in the economics of it all. And so, again, the things what I sort of outlined are economic building blocks, but they're really the building blocks for community economics. And I think one of the things that distinguishes token or games that have a token economy versus traditional games is they allow for that broader economic participation among not only the developer, but also the players. And so, sorry, the one point I wanted to make is that you talked about FIFA, and I think, again, FIFA is a great game and it's been wildly successful. But if you look at Metacritic and the scores of FIFA, it scores barely above 1 on a scale of 1 to 5. And so clearly for a wide swath of the player base, the economic distribution isn't really working for them.
Yeah, I mean, I think in those cases, there's a lot of vocal minority that just does not like the pay-to-win mechanics in these games. Yes.
Right. And so with some of the things I sort of outlined in community economics, et cetera, where, in your view, how do you think, what do you think of this sort of community economics theme as a natural continuation of the 4 themes that you had discussed?
No, I mean, I think it's a building, particularly for these virtual worlds that people are building. There needs to be a way of transacting between players and also between the developers. And I think there's certain value to having a system in which you could manage and operate efficiently and effectively with these communities.
Right. And just to sort of bring it back to the Roblox example you talked about a little earlier, and I'm a big fan of Roblox, but with Roblox, you see the power of how big a title can become when you start giving some of the participants a little bit of agency in that platform. And so I think that Roblox, correct me if I'm wrong, but I think Roblox was around in the mid-2000s, 2006, 2007. And I believe the Builders Club, which allowed for some of the builders to then be able to withdraw some of their essentially sales in that ecosystem, that happened in 2013, 2014, if I recall correctly.
Right. And they're continuing to build that and attract more and more developers to the platform and expand their demo and continuing trying to improve the payouts for their most active developers, player developers.
Right. And we're sort of seeing just the power, I think in my mind, of like the inklings of the power of giving sort of participants economic agency. And despite, I think, what some could argue as being a relatively high transaction tax. And imagine, and you could sort of imagine that it would be somewhat lower in the context of a token economy in which developers are incented to build an economy versus being a little more transactional focused.
Right, and make it more equitable for different types of players, I guess, would be the ultimate goal. So,
right.
So maybe improve kind of the perception of some of the player bases for these games as less toxic and more collaborative with people that want to spend and the people that don't want to spend. So that makes sense.
Well, especially when we talked about a little bit earlier about the idea of like rewarding and penalizing. And so when you consider the strange witch's brew that is toxicity and how certain environments become toxic, I think you need both. I think you need both the carrot and the stick to affect the toxicity of a game community. And I think this has the potential to do both of those things.
Cool. Sounds really interesting. I'm looking forward to seeing it implemented in some games going forward.
Well, so on that note, right? Yeah, on that note, so when you consider the trajectory of free-to-play mobile gaming, right? So free-to-play games, iPhone was out in 2007, and maybe 10 years later, in 2017, the market was 50 billion, and it almost free-to-play spend in mobile games across all platforms, 50 billion globally. And so it started from nothing, and then it grew to that point exponentially. And so who knows what the trajectory of gaming or blockchain and gaming will look like. But I think that if the past is the prologue, I think some of these platform changes and some of these innovations, once they sort of start taking hold, I think that the pace of adoption is pretty quickly.
Right. I think that's all the time we have, but really interesting to see, how this evolves. But and there's going to be plenty of opportunities to implement these type of, economies going forward in games.
Great. Well, I appreciate you spending time discussing this, Eric. As always, a pleasure. I look forward to hearing about this in Deconstructor of Fun.
Sure. We'll bring it up.
Great.
Have a good one.
Yep. Thanks.